Okay, guys, I wanted to run through a methodology for entering the market positions based on your directional bias. So, the directional bias, I'm going to sort of start drip feeding uh, the um, theory around the power of three and using the day count on a weekly template and trigger days for arriving at a thesis for the particular session that you're trading. So, for those that were in the market watch list at the beginning of today and the end of yesterday, um, will recognize that I was looking for a long in cable up into the low hanging fruit, which paid off nicely. So, let's look at that and a way in which we can enter the market um, based on breakdowns of structure um, and the theory that once a market is displaced, you can be in anticipation of a pullback, and we're looking to buy at a discount and sell at premium prices. So if we pull back to the day count, first of all, so we'll just come out of the sessions, we don't need that, and make the chart legible. So on Monday, it was an inside day of Friday, um, and we were looking for on Monday um, either a break of Friday's high or a break of Friday's low. We didn't get that, stayed in an inside day. On Tuesday, we were looking for a break of Monday's low or a break of Monday's high, and we got a break of Monday's low. So this is building the thesis that we are heading lower for the week, and this could be the high of the week on Monday. On Tuesday, so we broke Monday's low. We also broke Friday's low on Tuesday. Now we came back up into the shorts, and considering we didn't break Tuesday's high, but instead we broke Tuesday's low, we now have one complete day of shorts in the market plus another complete day of shorts in the market. So we've got one, two, and then on Thursday we broke the lows of Wednesday, so we've got shorts in again. Okay, now this is raising the expectation of a correction, just as we got a correction on uh, Wednesday. We got a correction on Wednesday. We also got a correction on Tuesday. So as the market is selling off, we're moving in classic waves. So we could expect that again on Thursday. But not only that, Thursday we could have been in anticipation of a much stronger move to the upside, right into the week's short. Okay, so we had our directional bias based on the day count um, and knowing that we had shorts in the market. So we had 3 days of shorts in the market, and we were in day three of a 3 day cycle. Day one, day two, day three. We can't include Monday as a part of the 3 day cycle because it's an inside day. So one, two, three. So we had 3 days of shorts in the market as well as being on day three of a 3 day cycle. On day three of a 3 day cycle, you can expect there to be a reversal play, depending on how the market is set up over those 3 days. In this case, it's set up in 3 days of lower lows, lower highs. So in that respect, we can expect a correction into that trend. If you look at that on a daily chart, it's a bit clearer. You've got 3 days of shorts in the market, and you can expect a correction into those shorts. Okay, so how do we set up for that in your given session? Well, it boils down to structure on the day and the lower time frames are going to give you that for your scalp on the session. This is the hourly chart, so we're not particularly interested in the hourly chart for a scalp on the session. We're going to look at the 15-minute chart. On the 15-minute chart, we can start to see the structure um, zoomed in on the day. So we've got lower highs being made and lower lows in that bearish trend. We've got that bearish trend line. Okay, we can bring in the sessions now. Look at this from a session point of view perspective. So you've got Asia, and you've got the break of Asian lows over here. Those were the lows. We broke those. We subsequently came back in. So when you break structure, you can be in anticipation of a pullback. You've got a displacement that broke structure in anticipation of a pullback. Structure, break of structure in anticipation of a pullback. We got the pullback. And then we continue lower, right? So we broke structure again in London in anticipation of a pullback. We got the pullback, squeezing out all of those positions, fueling another move to the downside. There's the structure. We broke the structure and we got a pullback. Okay, now we're looking to break structure again. We broke the structure all the way down here. We're in anticipation of a pullback. We didn't really get much of one. We're staying front side of the trend. Okay, we're still in anticipation of a pullback. We finally get that, and then we get another break of structure in anticipation of a pullback. So as we come into the New York session, we're in anticipation of a pullback. We've broken structure, we're in anticipation of a pullback. However, at this point, given that we're on day 3 of the 3-day cycle and we've got 3 days worth of shorts in the market that are breaking structure after structure. So in London, we were breaking structure. In London, yes, we knew that we were on day 3, but we were waiting to see how we reacted to the lows of the week. And instead of moving up and breaking structure on the London session, instead of breaking structure, we continued lower. So the trade was to go with the trend. We got that late in the day. And then in the US session, we had that move lower. And our thesis is right, well, at some point we're going to come up into these shorts. We've got the move lower. We're in anticipation of the correction. Okay, so we're looking for the correction. But at this point, if we're starting to break the trend, we're actually breaking the trend at this point, then the thesis is, well, maybe we're going to have an opportunity to buy and move up. So that is what was occurring. So the thesis is that we are going to squeeze the shorts, not only for the day. We've got three levels of drop, three sessions of drop. I mean, this is what's the range on the day at this point? 100 pips. We're at the bottom of a 100 pip box. So that's significant. So the thesis is for a move up. Now, how to know when to get in? Well, this is subjective, but you can be mechanical and you can uh, look at the lowest high as structure. And if you break that structure, break of structure, if you break that structure, then that's um, leading us to believe and giving us conviction that our thesis is right. Right. So we're waiting for a break of structure. Now, that to me classifies as a break of structure. We've got to close above those highs. If I put a magnet to that, that's clearer to see. So we've broken that resistance. But do I want to buy? Well, I mean, I can. I can buy straight away at market, go, right, this is going up. I'm dead certain on that. So you can buy at market, and you can have your stop below the lows, and then you've got your target, wherever that might be. A sensible area might be where we think stops are going to be from all of those shorts, maybe a little bit higher up into the Asian range, wherever that might be. But it's not giving you much of a decent trade-off, is it? I mean, if you lose, you're going to lose near enough 0.8, and you're pretty much not going to make as much. You'd have to pull it all the way up there to get at least a one-to-one. You could bring your stop up, but we know that the markets, when it started to place, pull back. We've already agreed on that. So pretty, if we're pretty convinced that the market, the majority of the time, is going to pull back, then you're looking for an entry at a discount. So you can be mechanical about that as well. And you could draw a game box on that, and you could say, well, I want to be buying high up within that range, or I want to be buying low down within that range, or somewhere in between. Okay, so you can make a rule on that. You can be mechanical and say, well, I will buy at all times at 0.33 of the box, a third of the box, the upper third, or I will buy at the midpoint, or I'll buy in the lower third, or I'll buy at the third, wherever that might be. So the lower down within that box, the less likely you're going to get filled. But when you do get filled with your stop below the lows, and if your thesis is right, and you only need to be right 30-40% of the time if you've got a very high risk to reward to have a profitable strategy. So let's say you put it in here, target up there, stop loss below the lows. You've got 7-1. Uh, you're going to get 7 back on your risk, or 8. If you're a bit higher up, still it's very healthy. 4. Midpoint, you've got 3-1. All right, so you can be wrong 7 times out of 10. And if you've got a 3-1, so if, let's say you're risking 7%, 1%, 1% each trade, and you lose 7 times, that's 7% that you've lost. But if you win, three times, out of the 10, so that's a 9% gain versus your 7% loss. That's still a 2% gain. Okay, so you can still be wrong 7 times out of 10 with a 3R trade off and still have a profitable strategy. Now, ideally, you want to get filled. Okay, so if we go for let's go for the middle of the range. middle of that candle's range, somewhere in here, around about there. Stop below the low. So that's a 3 to 1. So you're in anticipation of a pullback. You can monitor this on a lower time frame. You can simply put in your um, buy limit, and there you have it. So you're in the market and you're up towards your target. Okay, so that is one way of entering the market. You look for uh, prices to make their lows for the day, come back up and break structure, and then you're looking for a discount with your buy limit, and off you go. Personally, I took the entry at the midpoint of the um, W formation in anticipation of a pullback into the W. Right, so I was late to get into this trade with all the analysis I was doing for you guys and so forth, and other tasks, but nonetheless, I was in at around 126.50, and I took my money off in the low hanging fruit area. I didn't make the highs. I took money off around about here somewhere. Okay, so that is giving you an insight as to how to navigate these entries. Same thing with the euro. Right, we broke structure. Um, bear with me. Where was the structure on this one? Well, the swing structure was all the way up here. So breaking that, having the entry all the way down there, it was an unmitigated area at the upper third of that box. And there was the entry for a very strong 8R. Hasn't been achieved, but if you're wearing that all the way into the close, then so be it. But you have to wear the rollover and the widening of spreads. Um, so that's fine, but you can just come out and still be a very healthy 4-5R up at the end of the day. In fact, at the end of the day, for me, it's right up here, so 6.5R. Okay, so that is a strategy for buying or selling. You just flip it over on the other on its head at the high of the week or the low of the week, or high of the month or the low of the month. Um, yeah, okay.